I'm MacKenzie Sigalos here with CNBC Business News at Bitcoin 2025 in Las Vegas, joined by Strategy Chairman Michael Saylor. Thank you for joining us.
Thank you for having me.
A lot of announcements this week focus on corporate Bitcoin treasuries. You've got GameStop announcing a $500 million position, Trump Media looking to build a $2.5 billion stake. What do you make of this new trend that we're seeing, and are they doing it right?
No force on earth can stop an idea whose time has come, and maybe the most pleasant surprise over the past few months has been the explosion of energy and enthusiasm around Bitcoin treasury companies. The Trump Media announcement came out of the blue. I didn't know that was coming, but that was an incredible, courageous, aggressive, and intelligent move on their part. The Nakamoto announcement was a pleasant surprise. I remember speaking with David saying, you're doing these conferences, and if you believe in Bitcoin, you ought to raise a lot of money and buy a lot of Bitcoin. He said, you got a point there. And I was just very, very pleasantly surprised that he went and did it. I think...
also, SoftBank, Tether, and Cantor investing into
the 21 announcement is great because it brought a huge amount of capital from SoftBank into the Bitcoin market. It's like bringing Masa-san into the ecosystem is good. I think it's great to have Tether supporting a U.S.-listed company. I see, MetaPlanet was a $10 million company, and a few months ago it was a $1 billion company, and in the last week or two it's been flirting with a $4 or $5 billion company. Most successful stock in the stock market. The blockchain group in France has exploded out of the blocks, and they're just growing incredibly fast. And then everywhere I go at this conference, someone says, I'm working on a Bitcoin treasury company in Hong Kong. I'm doing this thing in Korea. I've got this thing I'm working on in Abu Dhabi. We're going to do this in the Middle East. We've got this in the UK. We're ready to launch one in Canada. We're launching one in Norway. We're doing this in Germany. And I just think it's awesome. It's great for Bitcoin. Every one of those companies, Brazil, there's an explosion of interest right now. Every one of those companies is bringing Bitcoin to another global capital market. They're solving the compliance issues, the capital markets issues, the registrations issues. They solve the political issues. They're all ambassadors for Bitcoin, planting the orange flag everywhere on Earth. And invariably, it starts with, this is a venture, and then it becomes, wow, this is a very successful venture. I never made this much money. And then it becomes, so tell me about the Bitcoin thing again. How did I make that money? And then pretty soon you have an entirely new generation of capitalists that have discovered Bitcoin is digital capital and maybe the most explosive idea of the era.
Why do you think that Wall Street hasn't responded as positively to the announcements from Trump Media and GameStop? GameStop shares are down 17% since they made the announcement. Trump Media shares down 22%. Seems to be pretty much the exact opposite reaction that strategy investors have had.
Well, when GameStop announced that they were going to consider a Bitcoin strategy, their stock jumped 50% and their volume 10x. And then on the strength of that, they went to the market and they did a $1.5 billion convertible convertible bond, which was extraordinarily successful. So they had raised $1.5 billion. Maybe the market wanted them to buy more Bitcoin, and so maybe that's it. I think with Trump Media, they did a very big capital raise, but a large component of that was a convertible bond. I think it's important to note, be sophisticated about this. When you're selling a convertible bond, 70% of the face value of the bond is sold short as equity. So the convertible arbitrageurs are always arbing the equity against the bond. And in the short term, you're going to see, if a company says I'm doing $1 billion secondary stock issue, the stock's going to trade down. All of these things will be short-term dynamics. Over the long term, Bitcoin on the balance sheet has proven to be extraordinarily popular, driving increase in liquidity of the MetaPlanets, of the similars. It's driven an increase in liquidity of GameStop. It will drive an increase and a benefit to the rest. It might take, 3 months, 6 months, sometimes, perhaps even a year But the strategy is very sound, and all of these companies will benefit from it.
And you pioneered this strategy. I mean, your balance sheet is worth north of $62 billion worth of Bitcoin. Is there a limit to how many Bitcoin you can own, or do you have a fixed number in mind?
No, we'll keep buying Bitcoin. We expect the price of Bitcoin will keep going up. We think it will get exponentially harder to buy Bitcoin, but we will work exponentially more efficiently to buy Bitcoin. It used to be we thought raising 200 million was a challenge, and then raising 2 billion was a challenge. And then in the fourth quarter, we announced we were going to raise 21 billion. And so we're getting better. Bitcoin is 10 times higher, 10 times more valuable than when we started on this journey. And the entire ecosystem is growing. But I think our strategy is very simple. It's issue credit instruments like preferred stocks that offer a yield in dollars, or issue some portion of Bitcoin upside with some downside protection. That will create leverage for our common equity. And then people will buy the equity or the derivatives of the equity or the options of the equity because they want higher vol, higher leverage Bitcoin. And people will buy the preferred stocks because they want lower volatility, lower risk, lower leverage, guaranteed returns. And we will straddle that, and there's no reason that can't just continue to scale as the ecosystem scales.
Now, the executive order that created a strategic Bitcoin reserve really put the task of looking at a budget-neutral way to acquire Bitcoin into the future into the hands of both Treasury and Commerce. Are you either advising members of the White House cabinet, or do you have ideas about how they might do that?
I think it's an incredible cabinet, a lot of Bitcoin believers in the cabinet, and there's a lot of good ideas circulating in the industry. The Bitcoin Policy Institute created a bunch of them. Even the cabinet members have mentioned quite a number of them. It's above my pay grade to decide what the U.S. government will do and when they will do it, but I do think there's an extraordinary opportunity for the United States. If I was advising the United States, I would say, all the capital in the world is going to flow into cyberspace, into the Bitcoin network. It's in the best interest of the United States to own as much of it as they can before everybody else in the world realizes what's happening.
I do wonder whether the underlying thesis of Bitcoin has fundamentally changed. It used to be that you don't want it to be tied to any one government or any one central bank, and now we're seeing the U.S. expressing this desire to become the crypto capital of the world, to have all mining centralized in the United States. Does that disrupt what Bitcoin was meant to be if you have all these governments now looking to stockpile the token?
I think Bitcoin is a manifestation of very healthy competition. So as the U.S. expresses support in Bitcoin, we have the Pakistanis announcing a strategic Bitcoin reserve. That inspires the Emiratis, it inspires the Middle Easterners to also begin to accumulate in Bitcoin. It accelerates Bitcoin adoption in Brazil. It accelerates adoption in Mexico. It accelerates the moves of corporations. Eric Adams standing up on stage and announcing his intent to issue bit bonds for New York City, that's going to inspire Miami and inspire LA and inspire San Francisco. It's, so it's healthy competition. There's more than enough to go around. The network is very anti-fragile, and there's a balance of power here that's created because the more actors that come into the ecosystem, the more diverse, the more distributed the protocol is, the more incorruptible it becomes, the more robust it becomes. And so that means the more trustworthy it becomes to larger economic actors who otherwise would be afraid to put all of their economic weight on the network.
Now, the president's meme token has attracted a lot of controversy. Many people argue that it's undermined a lot of progress on Capitol Hill with respect to some of those crypto bills that are now being held up, with Senate Democrats specifically citing that meme token. What do you make of this dynamic?
I think the best future for the crypto economy, for the crypto industry, and what the U.S. should do if they want to create a $100 trillion digital assets industry is, in law, they should define 4 new asset classes. The digital commodity, that's what Bitcoin is, an asset without an issuer. There's only going to be one king commodity. There might be half a dozen over the next decade. The digital currency, that would be a stable coin backed one for one with US currency equivalents in a regulated bank, like Circle. Then the digital security, that would be a tokenized stock or bond circulating 24/7, 365 at the speed of light everywhere in the world, like digital Apple stock or tokenized, SPY. And then the final would be a digital token. A digital token would be a tokenized fan club, a tokenized ticket, a tokenized membership of some sort. And there's 40 million small businesses in this country. And if you want to issue a token, you should be able to issue a token in 4 hours. And there ought to be an issuer, and you ought to say what the token does. It ought to have some digital utility or real world utility, but it should stop short of offering security or financial utility. It shouldn't give you liquidation preferences to a going concern. It shouldn't give you guaranteed cash flows for 30 years like a bond. It ought to be Joe Rogan token or Katy Perry token. And if Katy Perry wants to offer a token that offers her VIP fans the ability to book tickets 48 hours in advance to her concert tour, they buy it. It would have utility. It wouldn't be a security. And if she didn't go on concert for the rest of her life, the token would crash. And if her concerts were great, the token would fly. And when you look at Trump coin, it's a meme coin. That means a token that has no utility. How many people can sell a token with no utility? Only a handful of people will do it, but some people can sell a meme coin. And if they talk about it, if the Kardashians want to talk about it, or if someone, Joe Rogan, wants to sell something, maybe people will buy it. I happen to believe that there's a place for all four of those assets. I think that the role of a token is to give access to the capital markets to 40 million small businesses that are locked out of the capital markets. But I also think that tokens would allow you to create innovative new business models. And if Joe Rogan said, I'm going to sell Joe Rogan token and I'm going to give you content that only you can access if you buy the token, if it's a good product and if he wants to monetize it like that, as long as he's not lying, cheating, or stealing his customers, he'll be fine. And then I think it's pretty clear that tokens ought to be subject to consumer protection law. If you set up an eBay account and then you sell 47,000 tickets and then don't deliver any, that's fraud. And likewise, if you commit fraud on a token, then you ought to be subject to consumer fraud, wire fraud. And I think the issuer should be liable for the damage they do civilly and criminally. But that's no different than driving a car across the city. You don't need to wait 4 years and spend $40 million on SEC lawyers to drive your car across the city. Everybody ought to have freedom to do business. And so right now, we're in this intermediate period where there is no Market Structure Act. There is not in law the definition of a digital currency, digital token, digital security, digital commodity. If we want the world, if we want the industry to grow by a factor of 100 or 1,000, if we want to export, you want to export the currency of the United States to the world, you need digital currency. If you want to export the securities of the capital market, the Apple stock, the ETFs, the bonds to the world, you need digital securities. If you want to export all of the ideas and raise capital for all of the small, mid-sized businesses, you need digital tokens. And if you want to export the values of the United States, which are sovereignty, trust, sound money, freedom, you want to export Bitcoin. Bitcoin is American value, so you're going to export that digital commodity. I think it's very clear to me. There's a lot of work we need to do on Capitol Hill to put that into law. If we put it into law, then these debates and this anxiety will go away. I think the most important thing I say, MacKenzie, is it's not enough to write 1,000 pages of law that the lawyers think you can litigate for 20 years. You have to define the token so that 1 billion people in 5 seconds say, oh, that's a token, Joe Rogan token, I get it. And you have to define the currency so people say, oh, that's a digital currency that's backed by dollars, I get it. If 1 billion people don't understand what I just said in 5 seconds, it won't work. And once they understand it, they'll be like, oh, it's a meme coin, anybody can sell it, it's just a token, it's not a security, it's not a commodity, it's not a currency. It's a token.
And outside of classification, do you think it's a good idea to add an amendment where you would bar senior officials, including the president, from benefiting either directly or indirectly from stablecoin related ventures or token related ventures? Do you think it's good to introduce that kind of imposed?
I think the important point to note is Bitcoin is a commodity, an asset without an issuer. And that means that everybody in government, whether you're the president or a senator or a congressperson, they can own a bar of gold, they can own a house, they can have a chicken, they can have farmland, they can have timber, soybeans, a barrel of oil, and they can have some Bitcoin. That's just property and a commodity. I think that issuers should have responsibilities. The issuers that issue currencies should be regulated by the banking regulators and the FDIC because they're creating currencies. The issuers of security should be regulated by the SEC because if you're going to print $100 billion of Apple stock, you should have to have the Apple stock and you should have that liability. Issuers of tokens should be responsible for any damage they do through fraud. If you lie about what you've done, right, if you're untruthful, then you should be liable under consumer protection laws and any other applicable law. And I would say that should be applied to anybody.
Now, since January, we've seen the SEC, the OCC, the FDIC, the Fed all roll back guidance that stood in the way of crypto adoption here in the U.S. You've been here since Monday. We've seen the White House descend on Las Vegas, everyone from White House crypto and AI czar David Sachs to the vice president. What kind of conversations are you having with them about what you want to see next?
I think what's really important going forward is for the government to move in such a way that they make clear that Bitcoin is a legitimate asset, it is digital gold, it is a digital commodity, and they need to educate the world that this is not a security, it is not a token, it is not a collectible, it is not a currency, it is a digital commodity. Because we got to $2 trillion in market cap without the support of the banking system, without the support of the insurance companies, without the support of the credit rating agencies, without the support of mainstream media, with most of the power structure of the world, looking askance at this. So I think that for Bitcoin to go to the next level and provide the prosperity that it can provide to the U.S. and to the world, the world needs to be educated, and then all of these traditional 20th century financial structures, they need to embrace and at least treat this as a neutral asset. This week, for example, the Department of Labor rolled back guidance discouraging people from allowing employees to put Bitcoin in a retirement plan. Right, and for a while we were worried we were going to be investigated by the Department of Labor if we offered our own employees the ability to elect to buy Bitcoin. So I think there's been a lot of discrimination on the part of all of the 20th century traditional finance complex, and I think the government has a leadership role to bring them into the 21st century. Beyond that, in the entire digital asset space, as I said, the big three items is the government needs to memorialize in law digital currencies, digital securities, and digital tokens. That will go a long way toward alleviating the debate, the anxiety, the confrontation, and the conflict. It will also accelerate the investment and the development of all of these digital assets by a factor of 10 to 100. And the U.S. will emerge as the world's digital banker, the world's digital capital market, the world's digital innovator, right? And that'll be good for America, for the American people. And ultimately, the world wants these things too. They're frozen. Everybody else in the world is paralyzed and they're frozen. They can't innovate until Washington, D.C. defines tokens, currencies, and commodities and securities. And then every one of our allies will all lurch forward, and you will see an extraordinary Cambrian explosion of digital innovation, which will take the United States and the world in general into the 21st century.
Now, Michael, I've been covering this event for the last 5 years, last 5 consecutive years. You and I have spoken on the sideline of this event, and it's really evolved from being very Bitcoin-centric to, this week we had quite a few announcements around stablecoins. How do you gauge this convergence of Bitcoin with other corners of the crypto ecosystem? Do you think that we're moving in the right direction here?
I think that the industry was somewhat fragmented, and the Bitcoin community was bifurcated from the crypto community. And I think that what's happened over the past 6 months, maybe 12 months, you could date it from November 5th, has been an extraordinary coming together of the entire crypto industry. The crypto innovators, the stable coin industry, the Bitcoin industry, the traditional financiers on Wall Street, and politicians, they've all come together and converged with a common vision. And I think what people are realizing now is that what's best for the world and what's best for the industry is a commodity, Bitcoin, and the use case is store of value, long-term capital. A currency, the digital dollar, the use case is medium of exchange, right, for everybody on Earth. Then you've got the security. The use case is to create capital markets innovation and velocity. So, how do you self-custody Apple stock in India on Sunday afternoon, right, and move it to Singapore, right? And then finally, digital tokens. And the use case is to raise capital and to create compelling new products. I think 2 years ago, I thought there was just, the industry consisted of, well, I'll let Bitcoin grudgingly live and I hate everything else. That was the status quo a year and a half ago. And I think we have moved into a much more enlightened political climate where now people are starting to have calm, measured, constructive discussions. I can see why people in Turkey or Argentina might want dollars in their wallet. And if you're a Bitcoin maxi, you don't have to be angry at them for wanting dollars. And maybe there's a use of that. And then if you're a dollar person, you're like, I can see how Bitcoin could be a savings account for people that actually have enough dollars. And if you're a small, mid-sized business, and there's 400 million of them, they're starting to see well, maybe there's a path where I can issue a token and get the money and use the money to build my business. I shouldn't have to be ashamed or embarrassed about the fact that I need to raise capital to grow my business. There's nothing to be embarrassed about there. But 2 years ago, the status was, well, if you're not a commodity, we're putting you in jail or shutting you down. And so people in the crypto industry had to go through this kabuki dance, this theater of, well, I'm going to be a commodity because I'm either a commodity or I'm dead. Well, the truth of the matter is they didn't want to be a commodity. They didn't want to be the next Bitcoin. They wanted to raise money to grow their business in an ethically sound, transparent way, but there was no regulatory path to do it. Now, people are starting to see that, well, maybe there's an ethical path to sell a token. I don't have to hate Bitcoin anymore. And the Bitcoiners think, well, now we can live and be part of the ecosystem. Maybe I don't have to hate the stablecoin people, or hate the crypto token people, or hate the crypto exchanges. And collectively, the entire industry, I think, understands they're all better off and together. We're all stronger together. If the country is going to overcome its challenges, and if the industry is going to overcome its challenges, we're going to do it by creating hundreds of trillions of dollars of value. And the big unlock here is not technology. The big unlock is a regulatory breakthrough, which is define a digital token, a digital security, and a digital currency. The industry will grow by a factor of 100, who knows what, to 100 trillion or more. Bitcoin will march into the hundreds of trillions. The nation will benefit, the industry will benefit, the world will benefit. That's our path forward.
Michael, thank you. That's Michael Saylor, Strategy Chairman, joining us here at Bitcoin 2025 in Las Vegas.